Well, welcome to the Rebel's Edge. I'm Pete Najarian. I've got my man, Mark Lepresti, with us today. It's going to be exciting. John is traveling, which you pick a day of the week and you know John's traveling somewhere, right? I mean, the guy is always up to something, but it's good to see you, Mark. We were just talking about the fact we haven't seen each other in person in over a year, but we've definitely done the show quite a bit together. It's good to see you.
Always good to see you, Pete. And yeah, we do have to correct that. Maybe I might sneak up on you guys and join you for the book-related stuff at the Money Show at the end of the month. That's tempting.
Bring it on in, man. We'll be in Orlando. That's going to be fun. It's going to be great. We're going to be doing some filming of other things. We've got the book, and
right.
You know, the Money Show is a big one. I mean, those guys do an outstanding job. They always do, and it's amazing what they're able to accomplish, and it's great. So we're looking forward to that. That's only 2 weeks away, man. I mean,
I know.
It's not that far from Halloween. All right. Speaking of Halloween, actually, it's pretty nice today, so it's not that spooky. But let's jump to the macro minute, Mark. Let's get after it. I'm going to give you this. We've already started earnings season. I think it's pretty exciting. We've got the financials, of course. We got the release last week with JP Morgan and Citi and Wells Fargo and a few others. But the one thing that was a little spooky maybe was Jamie Dimon when he talked about this is the most dangerous time in decades. That's what I got for you with my macro minute, man. That's a little spooky.
It is. And, you know, against the backdrop of the fantastic earnings that came out this morning that are certainly kicking this earnings season off with a bang. Sorry, had to do it. I know John's not here. Kicking it off with a bang and certainly portending good things for the rest of the banks. But listen, you know, Pete, I tend to agree with him, and I tend to still question – for how long can the market continue to shrug off record levels of credit card debt, record low levels of savings, another, global conflict, renewed concerns about terrorism here in the United States? The market just seems to keep on going, and there's more bull talk than bear talk from the folks I'm talking to these days.
I'm with you. I find that to be amazing. Matter of fact, that leads us right into fantastic futures. And here's what my bid is for the
fantastic future.
Boy, I love that. I swear to you, that's fantastic. It really is. But Mark, when you bring that up, that brings me to this point of how about volatility? Now, normally under the circumstances of the backdrop that we all know we're in, you would think that volatility might be somewhere, mid-20s, maybe even approaching 30. That ain't happening. We have now gone from 12 in middle of September, 1280 actually to be precise, all the way up, and we did a nice run. We got all the way up to about close to 21. We fell back. We pulled another one just last week. We got all the way up near 21, and then we pulled back. And here we are today, down 9% for volatility, and the VIX is at 1750. It's amazing.
I don't get it. It's not. I don't think it's going to stay that low for long, though, Pete. I just don't. This market's on a hair trigger.
I totally agree with you. And the fantastic futures. I'm telling you, the volatility of these markets is amazing to me, and the velocity of these moves is even more amazing to me. So, like I've said many times, volatility is very volatile right now. All right, we're going to jump into one of my very favorites, Mark, Lululemon. Now, this is a name that. Boy, I got a lot of pushback when this thing was $66 a share. There was a lot of guys sitting around that desk I used to sit at saying, this thing is garbage. It's overpriced and this and that and whatever. Well, that's one thing. That's one point you could take. But the other would be, how about now they are now going to be an S&P 500 company. They're going to be replacing Activision Blizzard. That's a biggie. How about this? And I'll bet you a lot of people have no idea this is the case, but Lululemon presently has a forward PE of 27. Do you know what the forward PE is of Nike? Because it used to be a lot different than this. Nike right now, about 28. So let's think about that. Let's think about what this company's been able to do. Their gross profits over the last couple of years, up 24.5% just a year or so ago, up 23%. This year, actually full year, 25%. This past quarter, 23%. They are doing things right at Lululemon.
Yeah, I mean, this is a great example of some really high quality management bucking the trends of people looking to maybe trade down from Lulu. Lulu's expensive. This is in the luxury item category for a lot of people, Pete, as I'm sure you know. And this is a really, really remarkable print from this company, hitting a 52-week high, by the way, just before we went live. Not a surprise on this kind of momentum, but this is a great example of management really guiding a company like this through what could be otherwise some pretty rough waters for an item that's not exactly in your essentials category, right? I mean, you don't need the Lulu compression super duper, workout pants. You can go a step or two down or buy, dare I say, the Walmart Kirkland brand. You might not look as good at the gym, but who cares? Well, certainly I don't, because I don't go to the gym that often, as your brother likes to remind me. But I'm very impressed with this one. I was one of those naysayers, Pete. I was definitely one of those naysayers.
Well, here was where the mistake was on the naysaying, and we're going a little long, but we'll get back on track in just a second. But when you think about it, Mark, it was just for women early on, and then it became men, and then it was 30%, 40%, 50%, and then they brought in children. They have done so many things right, and it's not a matter of can you, it's a matter of want to, and people want to. During the pandemic, they wanted to be casual clothes. Post-pandemic, they still want to be in casual clothes. And I think that's what's really propelling this thing. It's why that growth continues to be extremely strong. Next up, we've got Man U. That's Manchester United. And everybody knows it. They're one of the biggest, if not one of the very biggest of all time. And it's a name that people are very familiar with. But there was a sheik that was out there that was wanting to buy this and looking to buy the entire thing. And everybody was convinced, well, he's going to buy this whole thing. It's going to happen. This is just the way it's going to be. Well, it didn't. And that happens once in a while in the stock market. But we did get Jim Ratcliffe, who came out there. He put up $1.5 billion for 25%, Mark, of this company or group, this sports group or whatever, however you want to phrase it. But it's amazing, but it's not the number that people were looking for. It's not the type of move that they were expecting. They expected a full buyout. That didn't happen. What do you think of this one right now? Because it's down on the lows. It was down about 12%. I mean, it was getting hit pretty hard.
Yeah, and it's come off those lows since the open, of course. But I'm curious, do we know what the reasons are? Have we heard any rumors on why that bid from the Qatari group, why that bid was withdrawn? Was it a matter of just coming to a price?
That would be my guess. Or just the whole process, that it's a very interesting thing. And the group, actually, the brothers who own the Tampa Bay Buccaneers also are a big part of this whole thing, the Glazers as well. So it's, who knows? There might have been some strong arming. There might have been something going on there. But whatever the case, it isn't how people thought it was going to be. That's for sure. And
maybe they thought they weren't going to get approved. Right. I mean, with sports franchises, you can't just buy a team. You actually have to be approved by the league. You have to be approved by the owners associations. Maybe there was concern around approvals. Who knows?
Yeah, could be. Next up, Verona Systems. Now, this one's a pretty interesting one, Mark, because they got an incredible balance sheet. They've got some shorts. This thing hit 52-week highs today. This is a stock that really took off. Morgan Stanley upgraded them, right? They got about a 16% upside on this one. You know who upgraded them just last week? Barclays. So you got Barclays coming at you. You got Morgan Stanley coming at you. People are all talking about what a great company this is. Data centers, some AI. They're opening stuff in Canada. There's a lot going on with this name. And because of that, this thing is going up, up, up. And they expect this thing to go up even higher. What do you think of this one?
Yeah, listen, don't bet against the growth of data, right? We say that all the time. And the security-related aspects of the industry are certainly no exception to that rule. AI is great. We're using it for all kinds of interesting things, hopefully mostly for good. But it's another tool, unfortunately, in the toolbox of the bad guys who are using AI in new and interesting ways to try to crack codes and hack into things, which only drives up demand for the kind of stuff that this company makes. The other thing on the horizon, Pete, is quantum computing. We don't know exactly when that's going to come into play, but it is in the offing in the not too distant future. And that's another thing. Man, oh man, a great thing in the hands of the good guys, but a superpower in the hands of the bad guys. So companies like this definitely on the watch list for a lot of data and data security savvy investors. I like this name.
You know who else is on a watch list? Not for the same reasons, though, is Rite Aid.
Oh, man.
Mark, This company, I'll tell you what, the struggles that they have gone through. I took a look and I went back a little ways because I thought these numbers were right, and they are. In 1998, this had a market cap of $13 billion. You know what the market cap is today? $36 million. I mean,
Wow.
this is a stock that you've got a huge short position out there. About 32% of it is short. They got about $6 billion in debt. Not so great. And then you just look across just about everything. Market was a $4 stock. Now it's trading at 65 cents. It's not trading right now because bankruptcy, and they've got issues going on. But the opioid, that's a huge thing. The lawsuits going on with that. That's a monstrous thing. The debt is just piling up day after day after day. Sales is slowing, and they're going to try to do something. They're going to try to repair themselves a little bit. They got a new CEO. They're going to cut the number of franchise stores out there and all the rest of it. But I don't know, Mark. This would not be one I would be chasing after. I can tell you that right now.
No, listen, this is another a little bit of a dinosaur, right? Certainly from the perspective of their brick and mortar presence. They don't need that much overhang from brick and mortar when you can get things delivered to your door. Similar pressure from, big box like Walmart that's expanded their offerings of what you typically would have to get at a Rite Aid. So why do I have to go to a Walmart and a Rite Aid when I can just go to Walmart and get those cosmetics and those basics in terms of health and beauty? This is a name that I am not entirely surprised to see go in this direction. We never want to see companies go bankrupt, but this might be the evolution of the species when it comes to Rite Aid.
Yeah, absolutely. Well, Mark, you got something you wanted to inform everybody about, so I'll let you take it from here.
Yeah, well, thank you very much, Pete. This is our Venture Minute segment.
At Mode, we make phones that let customers earn and save money directly from the things they already do, like playing games, listening to music, reading the news, even charging and unlocking. Our Earn phone has the latest features: a powerful battery with rapid charging, 128 gig storage, a triple lens camera, and a 6.5-inch HD screen. But what really sets us apart is our commitment to affordability. So far, Mode has facilitated $150 million in earnings and savings for customers. Mode Mobile has over 2 million 5-star reviews, and our Earn phones are sold at Walmart, Best Buy, and Amazon.
The service is used to offset, in some instances, entirely cover your voice and data fees. And there are many, many users that, in addition to having free phone and data service, are actually making money. This company is doing really well. They're doing a crowdfunding campaign right now. John and I are in the cap table. This is a paid advertisement. There was the important disclaimer slide at the beginning of the show. Just want to point that out and get that out of the way. But we really like this one, Pete. Get paid for the data that is getting consumed by companies anyway. Free cell service. Pretty cool stuff. Check it out. Mode Mobile.
Now, I think that's really cool. I really do.
Yeah.
I mean, I find that to be fascinating, and people should look into that one. That's pretty wild. All right, Mark, we're going to jump to some of the sports now that we got in front of us, and here we go. I'm going to start with this one. You being a New Yorker, New Jersey, New York, the whole thing. I mean, I know you're up there somewhere, and I don't know if you're necessarily a Jets or Giants. Doesn't really matter. How about this stat? The New York Jets have never, ever beat the Philadelphia Eagles until yesterday.
Mm-hmm.
And here's the amazing part. It wasn't Aaron Rodgers going back there and throwing some unbelievable passes in the game. Aaron Rodgers, as we all know, got hurt opening night and has not played. So everybody's been worried. Zach Wilson, he can't do this. He can't do that. Well, turns out that Zach Wilson is starting to show up a little bit more and a little bit more. And Breece Hall is healthy. That's showing up a little bit more and a little bit more. That defense, which was great a year ago, is still great now. This is really interesting to me, Mark, to just watch how the NFL, I'll tell you what, we've always said it, and it's always been true. Every Sunday, any given Sunday, anything can happen. That's why that movie was made, any given Sunday. And it's just absolutely amazing to me because, one of the great teams that we have seen, you've got a great quarterback, offensive line is stupendous. You've got great running backs, great receivers. You've got the best defense in all of football. And the New York Jets won. So it says a lot, and it's pretty exciting. Here's the thing that I would point to, because I'm a guy who always likes to look at things as simple as humanly possible. So when I watch football, I watch and I say, you know what? Why wouldn't they keep doing that until they can? Right. Well, the thing that Philadelphia did yesterday, ego got in the way. And what I mean by that is this. Do you know what the average game this year for Jalen Hurts throwing the ball? How many times would you think he'd throw it? And the answer, I'm not going to really, it's 33. That's how many times he averages throwing the football. He threw 45 times yesterday.
Wow.
Now, why would he do that? I don't understand. That's, you know what? It's one of those things, Mark, where you got to go in there and take what you can get. And if you're running the ball, you can take advantage of that. But they decided they were going to change everything up and start throwing the ball without actually giving the offense the opportunity to run the ball the way they normally would. It just shows you ego gets in the way at every single level, whether it's college, high school, but all the way up into the NFL. And they wanted him to throw the ball, and Brown wanted him to throw the ball to him, and he's a heck of a receiver, but sometimes you just got to run it. And that's what they had been doing. They were taking what teams were giving them until yesterday, and that's why they lost.
Yeah, I don't disagree. We are, just to dispel any rumors, we are Jets fans in this family. So that was a great game. We're certainly getting the season started off here in a very positive way for Jets fans. And apparently, the Hard Knocks thing didn't really hurt them very much. So, we covered the prospects for this team of actually having a real shot this season in prior shows. Looks like it's panning out. So JETS all the way.
I got one other thing where I want to show a little parody, and you don't watch probably nearly as much as I do, but partially I watch as much because I do love college football. But on top of loving college football, I do a sports show on Sundays for 2 hours. So I talk about college, pro, every sport, not just football, but I love college football. What I don't love is the fact that every single year it's Georgia or Alabama and somebody else in the national title game, right? And that may very well happen this year. But Mark, what I'm seeing is this. The parity in college football this year is absolutely unbelievable. And what do I mean by that? Well, look at the ACC, for instance. Any one of these teams that I'm going to name to you could be in the national title game. They're already in the national picture because they're in the top 20. But you've got Florida State, North Carolina, Duke, Louisville. I mean, those are teams that don't normally, some of them sound like basketball schools, and they are, but they're now football schools as well, Louisville and Duke. They are unbelievable. Yeah, the SEC still has Bama. They've got Georgia. They've got some other sleepers themselves. They got Missouri. They got LSU. They've got a few other teams that are playing really, really well. The Big Ten has their usual suspects of 4, and there's not any sleepers in that group. But the Pac-12, how about Washington and Oregon, who played each other this week? Somebody had to lose, and it was Oregon. But Washington and Oregon could very easily be national title playing teams and maybe even winning teams when it comes down to it. So we are seeing that it's not just UCLA and USC. It's not this team. It's not these teams and all of these conferences. We're seeing a little bit more and a little bit more where teams, they can beat anybody. I mean, there's some really good undefeated teams still left, and they're not all just in the SEC. So I like what we're seeing. The ratings are up. What do you think, Mark? Are you liking what you're seeing in college football, college sports?
Yeah, well, definitely. And, listen, college football has always been something that has got tremendous fandom. I enjoy watching college football. I think this season is really, there's no bucking this trend. So I'm plenty on tap for college football fans. There's no question about it.
Yeah, it's really great. I'm still not sure about all the NIL stuff, and I know you being a law guy as well understand some of that stuff and everything, but hopefully they can get some of those things worked out, and maybe even this whole free agency of college football, which is the portal. I'm not so sure that's the greatest thing either. I mean, there's a lot of positives. Yeah. There's a heck of a lot of negatives on both sides of the NIL and this whole thing of free agency, but we'll get it figured out. But so far, so good. So far, so good. Well, Mark, thanks so much, man. Always great to be with you. Love that you were able to join us today and give us all the different information you were giving us. Tell you what, that company's really interesting. You got my attention on that one. That's pretty cool. So we really appreciate all of it. Yeah, it's great.
It is. Thank you, Pete.
All right, man. Well, you have yourself a great time. John's going to be flying. Maybe he'll be back tomorrow. If he's not back tomorrow, you'll be hearing your phone ring about 8 o'clock tomorrow morning. Thanks, Mark. Really appreciate it, man.
Bye.